So it's been another busy day out there, and today I'm going to talk about another 4 stocks that have been making big moves for you guys. Obviously, it's very volatile. I don't know if you've seen the last few days, but for me, my account's been moving up and down a bit, and a lot of earnings. So today I'm going to talk about some of the big news stories for you guys. Hope you enjoy it. Hit that like button. Let's get started. So first of all, I wanted to talk about Starbucks a little bit again because there was a bit more news that I wanted to talk about with Starbucks. First of all, the sentiment. The sentiment, wow, that shocked me. I could not believe when, during the day after posting the video, the amount of people that were in the comments talking negatively about Starbucks. Obviously, you know, it's going to be a bit negative out there. You know, people follow the share price. If the stock is up, it's the best stock ever. If the stock is down, it's the worst stock ever. There's always going to be that element. But I was surprised to see how negative people were towards Starbucks. And as well, in typical fashion, as soon as Starbucks went down, I had the comments going, oh, you talked about Starbucks and Starbucks is down 17%. It's like, did you not listen to what I said? I said, I'm starting a position in Starbucks, and if it could go lower into the $60 or $70 range, that would be absolutely perfect. That's where I want to start buying more and more. This is why sometimes I have to repeat myself, because some people just don't listen to what I say. I said that I want Starbucks into the $60 to $70 range because that's when the valuation to me gets a little bit more attractive, and this is perfect for me. This is perfect. I love it when a stock goes down. Getting a stock at cheaper prices, that's what you want to see. And just, you know, flicking through some of the forums last night, it was absolutely negative out there. But it reminds me of Facebook. You know, do you remember when obviously Facebook now it's you know, $300 and $438 to 52. It was a $500 stock not too long ago until its stupid earnings dropped, which it probably didn't deserve to have. But only a year ago, you know, Facebook was a $90 stock, and since then it's come you know, nearly a 4-bagger since that time frame. And do you remember during that time frame, nobody was positive on Facebook? I was talking about Meta, Facebook in the YouTube when it's $90, and nobody was interested. Nobody wanted to own Meta. It was the worst stock ever. Oh, it was the end of the world. Oh, TikTok's around. Meta's never going to be able to beat TikTok. Nobody uses Facebook. Facebook's not going to grow anymore. Do you remember when people were saying that? It's peaked. It's now a dead platform. It's now going to deteriorate. And very quickly, a couple little tweaks in the business, boom. Everyone talks about Facebook now. Everyone says, oh yeah, I was buying, you know, Meta when it was so and so. Oh yeah, I was positive on it. Like, I don't think so. I didn't see many people being positive on it. And it's amazing. It's amazing how all of a sudden it can be the best stock in the world, and then it has a little bit of a bump, and then all of a sudden it's considered a dead stock, and then all of a sudden it's the best stock ever. It's amazing how quick sentiment on the share price will change the feeling around a stock. It's like PayPal. Obviously, we've seen Meta do the full circle where everyone loved it, everybody hated it, and now everybody loves it again. PayPal has got to the part of the cycle where everybody loved PayPal, everybody then hated PayPal, and PayPal's got to the point in the cycle where people are starting to go, not Meta's kind of levels where it was like, yeah, obviously it was a good opportunity, but it's got to the levels where people are going, you know what, it's not looking too bad now, maybe there's a bit of a turnaround going on. It's at the early stages of maybe where we look back and go, do you remember when PayPal was $51? You know, since that time frame, you know, the stock has rallied over 30%. So it's a little bit earlier on in the cycle, but you know, everyone's negative on PayPal at $50, calling it a dead business, a dead money business. And now it's got to the point of view where people are going, well, maybe there's something there. Compared to now where we're at the complete start with Starbucks. You know, Starbucks is at the start where everyone goes, oh, it's a terrible business, it's a terrible business. So it's funny how these cycles turn around with businesses, and how the sentiment so much reflects the share price at the moment. It made me laugh that this is probably, it says a lot that everyone's negative on this stock right now. However, I'm a buyer. I own Starbucks, and I am enjoying the dip on Starbucks is what I'll say. I've got to say, the one thing that did make me nervous yesterday, which I didn't know before I made yesterday's video, is the Starbucks CEO. So I've had a little bit of questions around, so basically Starbucks brought a new CEO in. And I've had a little bit of question, always when there's a new CEO comes in, there's always a little bit of nervousness. But, however, he did go on CNBC, and he went on with Jim Cramer. And I've got to say, Jim Cramer did give him quite a bit of a grilling. However, what was probably more worrying is the impression the CEO gave. He looked like a deer in headlights to me. He looked like someone that just wasn't prepared at all for this. And Jim Cramer laid into him. And his response was just so much stuttering. And it was like, you've got to be quick at that. As a CEO, you're there to defend your stock. You defend to try and highlight your stock and show that, hey, you know, this is our game plan, we're going to turn it around. And he was like saying, oh, Starbucks isn't popular, you're losing share. And his response was a little bit like, didn't really give a convincing answer. And, a very easy convincing answer would have been, well, actually, if you look at the Piper Sandler teen survey that came out 2 weeks ago, we gained market share with teens, and that's probably one of the most important categories, is that we are an up and coming trendy platform. That's a very, I'm not the CEO, but I'm selling you to the as stock, the shares, the company, and the popularity of the company a lot better than what even the CEO did during this interview. And I gotta say, like, my confidence with the CEO is, I mean, at the end of the day, it's not important being a good public speaker, but I think it does help. Obviously, the big thing is delivering on the financials. The delivery of the financials is the most important thing. But at the same time, I think it does help to be a little bit of a good speaker to kind of, defend your stock, or maybe highlight how good your stock is. So definitely the only concern that I had with yesterday was listening to the new CEO when he was on Jim Cramer anyway. Next one is Etsy. So Etsy's having a terrible day. The stock is down 14%. Year to date, the stock is down 26%. And I actually bought into Etsy. I bought before the back end of 2023. Stock went up. I sold it out for a nice profit. I was seeing the warning signs. I was seeing a few things that were making me a little bit nervous with Etsy. And I made a video for you guys going, I'm buying this stock as a turnaround, but I'm not seeing the turnaround in the numbers, the data. And sometimes, you get the bashing for when things go wrong, but you never get the credit for things when things go right. And I've got to give myself a little bit of a pat on back here, because I bought the stock, thought, it looks like it's turning around here. Made a bit of profit, and then since then the stock has just even fallen to new lows today. And the warning signs were there, and then the warning signs were actually shown in the earnings report. We saw the downgrade in the analyst, we saw the numbers, the cuts at the moment, the staff redundancies that were going on, and EPS was a miss, revenue basically flat, very, very weak numbers from Etsy. And that also led to CVS Health. I don't know if you saw this, but it's down 3% today, but yesterday I think it was down like 16% or something. But yeah, it said that CVS Health posted the biggest one-day drop in over a decade. That's absolutely mega, is that? And 17%, and it brought out earnings that was a little bit disappointing to Wall Street. And I've got to say, it's a little bit positive for me, because obviously I own Walgreens, and I was like, is this just a Walgreens problem, or is it an industry issue? And now that CVS are posting, bad numbers, it was like, that's actually quite good for Walgreens. What also showed is that I actually thought Walgreens' last numbers were actually okay. And to say that, in my opinion, the numbers that Walgreens have recently brought out are a lot better than CVS, that makes me quite happy as a Walgreens shareholder. Inmode. So Inmode brought some news out today. I am shocked. I am absolutely shocked. So the stock is not up more. I thought the stock would be up probably 5 to 10% today. Now, they brought out the financial results. Obviously, we got the preliminary results, so there wasn't really much of a shock with the financials. Obviously, the financials were a little bit disappointing, down 24% on the revenue growth. They did miss, but the EPS it was a slight beat there. But you look down the numbers here and you just go, they're still having this situation where the higher interest rate is killing them. And there wasn't really much excitement there. And actually, when you started digging into the numbers, or actually into the press release, it wasn't even in the headline here. It was in the below it. Company announces share repurchase program of up to 8.37 million of shares. And it was like, hold on. The big thing that I've seen so many Inmode shareholders, including me, banging on about is start buying back some shares. And this announcement here is probably going to be around about 10% of the company they're going to buy back. That's good. That's all we ask for. We don't need to burn through the cash. We can maybe increase the buyback in a little bit, but the big thing is that we wanted to see them use the cash to buy back shares when it's this cheap. And they did it. This is what we've been wanting for a long time. And the fact that it wasn't in the title, I was like, if this were me, this would be in capital letters, in the title, published everywhere. And they didn't do it. And I thought, this is really good news, published everywhere. And I was a bit disappointed with Mo that obviously it's in there and close to the top, but, I thought maybe a bit of a big deal about it. And I don't know, because obviously when I saw the first report from Seeking Alpha, there was no mention of a share buyback. Normally here you would see share buyback announced, and it wasn't in the title, it wasn't in the description. And I was like, even Seeking Alpha haven't picked up on this. Like, I think the market's missed it. I think Inmode have done a really bad job of announcing it. It should have been in the headlines capital letters, bold writing. And then also because of that, I think it's knocked onto the market where the market has gone, oh, we didn't even realise you're doing a share buyback, because even Seeking Alpha haven't even mentioned it when they published the earnings. This should be up at the top, and it's not. I think they missed it. And I think because Inmode haven't done a good job of announcing it, and then other publishers have missed it, that realistically, there wasn't really that much information that was new on the earnings report. But the share buyback should have probably sent this stock up positive by 5-10%, and it hasn't, and that was a little bit frustrating, And all this time that Inmode have said, oh, we don't want to do a share buyback because we don't think we'll get the returns for it. I bet they're thinking on the board, oh yeah, see, we didn't get the returns from it. But at the same time, the reason why is because you haven't done really a good job of going, look, we're doing a share buyback at last, which was a little bit disappointing overall. But it's good they are doing a share buyback and starting to use the capital. But I just think it was maybe not announced in the best way. But that is good news for Inmode. I mean, Qualcomm's up 10% today, trading at 24 times earnings. And I looked at the numbers and I was like, yeah, I mean, the EPS was a beat, the revenue was a beat, but it's only 1.3% revenue growth. It's like nothing, too exciting. They did hike up the guidance a little bit, I think. But the big thing is that I'm noticing at the moment is that as long as you are a company and you are involved in the AI space, and this was the headlines, is that the revenue forecast is pushed up because of AI-powered smartphones. It seems like only the companies that are involved in the AI or spending in AI at the moment. I've listened to probably 6 conference calls in the last 24 hours, and so many of the big tech are mentioning AI at the moment. And it seems like at the moment that the market's kind of getting propped up with AI. Like, it seems to me at the moment that the Meta, the Googles, the Qualcomms, Amazons, all those sort of companies that are involved in the AI, mentioning AI, some of them are actually doing pretty good earnings. And that is, in my opinion, making this earnings season look a lot better than what it is. And I think it's making the stock market look a little bit better than what it is with some of the gains that are in there. I think when you scratch under the surface past this AI, and when you look at the AI boom in the last few years, if it wasn't for that situation, I've got to say, I've listened to a lot of conference calls in the last 7 days. A lot of companies. I've looked at a lot of companies' earnings. I am seeing such a weak consumer environment out there. So weak. I mean, we talk about Starbucks. Starbucks is showing weakness. We talked about Etsy, another consumer product out there. Massive weakness going on with Etsy. CVS Health, consumer business. Once again, massive weakness out there. Inmode, consumer business. Massive weakness out there. Tesla, massive weakness out there. At the moment, earnings season looks okay from those big companies and those companies that are focusing on AI. But I've got to say, the big thing that I've noticed at the moment is I think AI is covering up a lot of the cracks here. And you probably saw on the whiteboard that, and the title of the video said AI cover up. This earnings season has been an eye opener for me, because what I've noticed is that so many companies are in a race to spend on AI, and it's mostly the big companies out there, and it is hotting up, and it is a very competitive space. But under there is a lot of weakness out there, and a lot of the consumer stocks, a lot of people are saying, oh, Starbucks is doing rubbish, but it's not. It's the economic environment out there, guys. It's a lot weaker than what I think a lot of people are seeing. I'm looking at a lot of consumer related stocks. Starbucks, not many people going to go get the coffee, spending less at the coffee. People going into CVS a lot less. People aren't going to go get appearance work done. You look at that. You look at the likes of Tesla. People aren't going out and buying cars as much at the moment. The consumer, for me, the big opener for me in these last few days is the consumer is getting a bit stretched. I feel like this higher interest rate environment is starting to kick in for them a little bit, and I think we're seeing that with a few companies' earnings. And I think if it wasn't for the likes of Meta and Google and the whole AI situation, I think a lot more people would be saying the cracks are showing in the economy a little bit at the moment. I think there was actually a consumer spending report that came out 2 weeks ago on Friday, and I think that caused the stock market to go down. And even that report said that people, a lot of people are spending a lot less, and I do think that's starting to happen. I do think that's starting to happen a lot more when I'm listening to some of these earnings. It's not a coincidence that it's not just Starbucks that's down at the moment. It's other stocks. It's the CVS. It's like the Inmodes. But what will be interesting to me, one earnings report that I'm really looking forward to now is obviously Starbucks is showing weakness. I'm really looking forward to Dutch Bros. Dutch Bros is one of the competitors, one of the main competitors to Starbucks, and I'm really interested to see what they do on the same store sales. Now, their numbers will probably be a lot better than Starbucks because they're opening up a lot more stores, and overall that'll be a bigger increase on the storefront. So the new stores will probably make it look like, you know, the growth's still very good. But what I'll be really interested to see is the same store sales. If the same store sales are actually a lot weaker and downgrade, that would be a big signal to me that the consumer environment is weakening massively. So that's another earnings report that I'm actually looking for anyway. So yeah, just a few things to point out there. Starbucks at the moment, Inmode at the moment, CVS at the moment, Etsy, Qualcomm, and the AI, the situation that's going on. Yeah, just a few things that I thought I'd point out for you guys anyway. So yeah, let me know if you're seeing the same weakness out there at the moment anyway. Hope you enjoyed the video, guys. See you in a bit.